Hey guys, AT&T is one dividend stock down 34% that I think you might regret not buying on this dip. So I'm going to talk about why I think that's the case in this video. So let's begin. Starting with AT&T's robust dividend yield at 5.64%. This is a very nice dividend yield. This means if you invested $1,000 in AT&T stock, you could potentially get dividends of $56 for the year, and that's without the potential for a dividend payment increase from AT&T. So it's a very nice dividend yield. I like stocks that offer nice dividend yields at 5% or higher, which AT&T is offering right now. The other reason why I think AT&T is a nice dividend stock to buy is because of its potential for revenue stabilization and revenue growth over time. I have here a chart of AT&T's revenue over the last decade. What you see is very nice growth over here all the way to 2020. The collapse you're seeing is because of a major divestiture. AT&T sold off its DirecTV business, and so that caused its revenue from the DirecTV business to get off its books, and that caused a decline in its revenue. But going forward from here, I like AT&T's revenue prospects over the next several years. People are liking the 5G internet. They're connecting more devices to 5G. They're adding their tablets. They're adding their smartphones. And one of the last things people are going to cancel is their wireless internet connection. So you're going to go through a lot more other things before you get to that level. So I like AT&T's revenue here. And I especially like AT&T's revenue because of this other metric here. It's operating profit margin. So not only is AT&T bringing in over $120 billion in revenue, it's doing so with an operating margin that's in the high double digits and growing, right? You look at its operating profit margin from 2016, and you can even go back to 2014. You could draw a nice upward line here from a little less than 10%. They've worked their operating profit margin up to 17.82%. I like the progress and I like the level, especially when you're operating a company with over 100 billion in revenue. That's a lot of cash flow that's AT&T is throwing off that it can continue to sustain and support its dividend payment, which I like to see as a dividend stock investor. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. The final thing I'm going to look at when saying why I think AT&T is a dividend stock you might regret not buying is its valuation. It's trading at a forward price to earnings ratio of 7.827, which is about average for AT&T. If you go back to January of 2022, this is about the level it's been at. It was a little bit lower. It's also been a little bit higher, but this is about the range that AT&T has traded for going back a year and a half or so. And this is about half the value of the average stock in the S&P 500 in terms of the forward price to earnings ratio. So you're getting it at a reasonable valuation that protects you from a little bit more of the downside. The stock is already down 30 something percent, and at a valuation of just 7.8, it protects you a little bit on the downside because if it was to go much lower, it would reach the low point of price to earnings of 6, and that the stock quickly rebounded up higher when it reached a valuation that low. So you don't usually see stocks of the quality of AT&T trade in these ranges, and this is a good opportunity for investors, especially dividend seeking income, passive income seeking investors. I think you're not going to want to miss out on this opportunity. So you might regret not buying AT&T stock here. All right, so I've picked another video that I think you'll enjoy that's popping up on your screen right now. I've hand selected that video just for you. I think you'll enjoy that. So please click that video and I'll see you over there. Thank you so much for watching.